Once a month or so, we invite real estate investor experts Peter Kinch and Don Campbell to Studio 4 to educate us about real estate, ups, downs, and in-betweens. This month, Don has a new book out called Secrets of the Canadian Real Estate Cycle. Peter Kinch is a mortgage expert who writes books too. His last one, the Canadian Real Estate Action Plan, was put together with Don. You've been a duo for quite some time.
We've been helping Canadians for a long time together.
Yes.
Yes, we have. Yes.
Have I asked you this before? How did you get together? I don't mean as a that kind of couple.
I was speaking at an event in Richmond, I believe it was Richmond.
Yeah, it was Richmond. Yeah.
And I was talking about banking and real estate and how, as an investor, you have to be honest and truthful and full of integrity. And all of a sudden, he's yelling at the back as a professional mortgage broker who hadn't heard that before, going, "You preach it." And I went, okay, good.
Preacher brother, I think, was the exact word.
It wasn't sister, that's for sure.
No, that's for sure.
Yeah.
Okay, so the two brothers got together, and the newest book is about the Canadian real estate cycle. I'm assuming every country has a real estate cycle. What's the Canadian real estate cycle?
Well, the cycle itself is predictable in any country. You know, my co-author, Kieran Trask, is from New Zealand. He studied the Australia, New Zealand, UK. We've studied the Canadian, the US, and some of the Asian market cycles and the real estate systems. And they all are driven exactly the same. They're not driven by average price. They're not driven by what people believe are the interest rates. What they're driven by is really clearly, and we've got it graphically described and on this giant arrow, and it says this cycle is driven by GDP growth, as you can see on the screen, job growth, and population growth. If you've got those three occurring, inevitably 18 months later, the market starts to take off. The sad part is that people expect it to happen immediately. So when I make a prediction in 18 months that the cycle is going to turn and go positive, everybody goes, well, it didn't change, Don. It's Thursday. What happened? And the truth is, if you look at the graphic one more time, we look at the bottom of the graphic is 18 months before the real estate market starts to change. The sad part is the majority of people pay close attention only to the headlines, which is the property purchase demand, the average price, and those things. So we want to be able to predict the cycle long in advance.
So increased rental demand and eventually increased rents, and on it goes. Why do we care? Why do we care about this? Why should we care about this?
You know, one of the things is that, Fanny, so many times people get emotionally driven, and emotions drive their decisions. I've noticed it a few times. You know, I have a unique opportunity working with real estate. Being a real estate investor myself is one thing. Being a mortgage broker working with real estate investors, I get the unique opportunity of seeing thousands of portfolios and seeing the numbers every single day. So not just my own personal experience, but the experience of my clients. And where I see people who are successful versus those who you know, kind of pop and fizzle, is whether they're sticking to the fundamentals or whether they're being driven by the emotions. And that's really what Don's referring to here. And his cycle that they're talking about takes the emotion out of it and gets you back grounded in the fundamentals.
Sure. Well, we hear all the time. I heard just the other day someone said to me, you better sell your house now because it's really hot market. And if you want to retire in 10 years or 5 years or a year, you better sell it now, invest it.
Here's a question I'd have for those people. Where are they getting what's their source of information?
I have no idea. Didn't ask that. She's a friend.
Yeah, exactly. And where's the source of information, and what's the key driving force behind the decision-making process? I would suggest that, and Don, you probably agree with this, 90% of the time we find that it's driven by emotions as opposed to fundamentals.
Almost 100%. And the sad part about the book is that what it's going to do is it's going to put a bunch of people on the unemployment line. It's going to be the people who are the Chicken Littles and the prognosticators. I want people to be able to make the decision themselves the way that sophisticated investors make the decision. Not listen to me on a radio show and then make a decision whether to buy or sell. This here will allow the average Canadian, whether they're going to buy a house or an investment property, to just kind of breathe and kind of work their way through what is going to come. Because the sad part is there are market drivers which drive a cycle and market influencers that drive the emotions. And that's where people get mixed up between the two. They make the decisions on the influencers, and sophisticated investors and people who know how to read the cycle make it on the drivers, and that's how you win in the long-term part of the real estate game.
As you know, every day something changes in the world.
Yay.
No kidding. The Greek crisis, the Euro crisis, alive and well. In the meantime, British Columbia gets a big shipbuilding contract. So which incident or event should we pay attention to? Or influencer.
So the
what's
driver,
happening in British Columbia or what's happening in Greece?
Well, the driver of the market would be the $8 billion contract, because that's over 2 decades. That's jobs for 20 years. That will be an underlying pin, a foundational piece, a driver. What's going on in Europe is definitely an influencer. It's outside of the realm of the long-term cycle of British Columbia, but it is going to be an influencer. And if you have a very short-term view, like a 1 or 2 year view of the real estate market, those kind of influencers can really throw you off. It throws a lot of confusion in. So it's a big difference. You really have to watch. And it boils right down that if Greece goes sideways, then Italy goes sideways, then the demand for our commodities out of British Columbia will slow down, and therefore the jobs will slow down. So you have to watch the whole game, not, oh, the average price is over $1 million, Fanny. We should stop, we should sell, you know, that kind of thing. We need to get through that and start thinking this, let's say it a little less politely, more maturely than we have recently.
So you're asking me to be a long-term thinker?
Yes.
Or a long-term investor, or what?
No, a long-term thinker, because say, for instance, you want to cash your chips in the next year or two out of your real estate market. So look for where the jobs are, when the jobs are going to come in. For instance, the shipbuilding contract for the Lower Mainland, you're going to see some real buoyancy come into the market for a little bit, and a lot of optimism. So that might be the time that you cash your chips. You put it on the market, sell it, take it out, rent the beautiful spot in Cole Harbour until you decide what next to do. But if you're a long-term, so that's if you have a 1 to 2 year window. If you have a long-term, 5, 7, 10, 12 years, then you know that you'd start looking back at the long-term cycle, and you can get through the influencers like the HST. You know, there's an influencer. They announce the HST. The new sale market goes crazy. It looks like there's a boom on. It's just people trying to beat the HST. Now with it coming off, guess what? There's going to be a real cap on the new builds until the HST is off. It's a total influencer. It's an emotional driver.
So it's a big influencer, you're saying?
Sure,
really?
It is. Yeah, because
HST.
It's emotion. It's all emotion.
Well, I think the big thing here is...
Is it true?
Well,
good question to always ask.
Yes, good point.
I think the key difference here is if you buy and hold for the long term, then the influencers that Don's referring to, i.e. the HST or what might be happening in Greece or Europe right now, are short-term influencers, will not have a prolonged effect on a long-term buy and hold strategy. But when we look at the headlines are what drive one key component that I always focus on is consumer confidence. And consumer confidence is the factor here that is not measurable is emotions. And the consumer is a funny animal because they're emotionally driven so much that it almost has it makes it difficult for economists to have predictions. Because we could sit down and say, well, based on the economic fundamentals, based on Canada's domestic strength versus Europe's mess versus America, we could do all this math and we could do all this prognostication and whatnot. But then all of a sudden, you take an economist and you take the consumer and you throw in this human emotion component. And in my books, human emotion is something that can't be measured.
That's your influencer, the emotion, the confidence. But the confidence comes from the headlines, because that's how the majority of people, as they're driving in, they listen to the show. As they read the newspaper, the world is ending. That lowers their confidence. Even though we know for a fact, Fanny, that Canada has become a safe haven for huge amounts of capital from around the world. Europe, Asia, Middle East. It is pouring in here, buying companies, buying shares, buying our bonds, and buying our real estate, because everyone outside this country that I speak to says Canada is the place for the next decade. We're parking our money, and it's going to be safe here. But the people here are watching the local headlines and going, oh my goodness, there's an election. We don't know whether Gregor Robertson is going to get elected again, or if Diane Watts is going to this, and Christy Clark, and you get caught into the influencers. The politics don't drive the market.
But if you do know that German investors, Hong Kong investors are coming in, safe haven, good place to park your money in Canada. If you live here, why not park your money here too, instead of in Germany or Hong Kong?
Well, one of the factors, and Don, one of your favorite expressions is a confused mind always says
N-O.
No.
Oh.
So
it's easy.
That would be my mind.
Well, but here's the thing, Fanny. How many people who just, the average Joe on the street picks up the paper, gets influenced by the headlines, and when people get afraid and they get confused and they're not sure, and there's going to be a lot of headlines that do this. They're going to stir emotions and create confusion. And so what's going to happen is, in my opinion, I'm expecting that a lot of people are just going to sit there and say, I'm just going to take my chips off the table, sit back, wait. Meanwhile, people outside of our country are going to look at the fundamentals at dawn, and they're going to see opportunity.
Okay, but if you park your money, you've parked your money, now it's parked. You own your house. You've got some money parked. Your neighbor says, because the neighbor always says things like this.
The neighbor always knows. Did you notice that?
The neighbor always knows, and the neighbor says, you should invest in something, a building of some sort with cash flow. Yes. Good idea, not good idea. Buy a downtown condo, rent it out, buy a commercial building with some partners, rent it out so the cash flow comes in.
Well, I think the key is built into Peter's book, which is your action plan. Is you might say no to that deal because of whatever your investing timeline is, and somebody else may say yes to that deal because of their investing timeline is different than yours, or their goal is different than yours. And the sad part is that people make decisions based on what is good for everybody on the average. Well, that's a mistake, because you're gonna have a different income level and a different net worth level and a different retirement plan than your neighbor.
Of course we are.
So you look at it that way.
Unfortunately, because I have a rich neighbor. But there you go. Let's come back and talk about mortgage rates, like how they drive what we buy, how we buy, the whole real estate portfolio idea. So many don't even have a real estate portfolio, can't afford to rent a condo. Yeah. So where do you start is the question. Secrets of the Canadian Real Estate Cycle, the new book, the Canadian Real Estate Action Plan, The Veteran. We'll come back.